Hello, everyone. I'm Peter Mészáros, and I'm very, very happy to introduce you today, Rudi Fronk from Seabridge Gold.
Great to be with you today, Peter.
A few weeks ago, 2 or 3 weeks ago, both of us visited the Rule Symposium, and your company was one of the best. Your company had one of the best story from there, what I heard. So I found it very interesting. I'm very happy that you are here with us today and you can introduce your company because it's I think, beneficiary for everyone. So thank you. My first question would be that, I will ask you a summary, a vision, and what is your unique view. But before that, could you please tell us what asset or assets you have? And before you do that, I tell the viewers that you will tell unbelievable numbers, right? Numbers that just too large. So could you also put these into perspective for the beginners? So what this really begins? How many times is it the average gold mine or something like that? So what assets do you have? What is the real value?
Yeah, so right now we have 5 what we call core assets, 2 of which are advanced stage with proven and probable reserves defined, preliminary feasibility studies completed, those being the KSM project located in northern British Columbia and the Courageous Lake project located in the Northwest Territories. We also took advantage of a down market in 2015 and went out and bought 3 earlier stage projects, Iskit in British Columbia, 3 ACEs in the Yukon, and the Snowstorm project in Nevada, any one of which we believe can be a company maker, and we're advancing all 3 of those on the exploration front. But probably the jewel of the portfolio is KSM, 100% owned large project in northern British Columbia. It's a big porphyry system. In fact, we own 5 deposits. It's not really a project, it's a district. Our 5 deposits give us 11 billion tons of economic resources that capture 154 million ounces of gold, 54 billion pounds of copper, over 800 million ounces of silver, and a lot of molybdenum on top of that. So in terms of scale, it is the largest undeveloped gold copper project in the world.
You told numbers, huge numbers. What does this mean for beginners, Like an average gold mine, or just to put it into perspective. So how many times is it bigger? Or
well, in terms of metal in the ground, we have as much metal in the ground as Newmont and Barrick reports in terms of their reserves and resources. So it's right up there with the biggest. And on a market cap basis, though, we have all these ounces in the ground. In fact, if you add up all the metal value, the gold, the copper, the silver, and the molybdenum, and divide by our 80 million shares that are outstanding, there's over $6,000 worth of value in the ground compared to a share price today of about $13 or $14 a share. So there's a disconnect there in terms of metal value in the ground versus share price. And I get that, time value of money comes into play, the amount of money you got to spend to build the mine and the operating costs. But just to put that into a number, there's what you have.
Yeah, it's unbelievable. And we will come back to the value proposition, but what is your vision? What is your unique view in this industry?
Well, I'm a mining engineer. I've been in the space for almost 40 years now. In fact, I think I did turn over 40 years, so just last month. Our industry is hell-bent on turning gold into cash. The big companies go out, they buy deposits or they find deposits, they build a mine, they dig it out of the ground, and then they sell that gold for cash. And if they make enough cash, they can dividend out some cash to their shareholders. Our view is that people invest in gold stocks because they want exposure to the gold price. And by turning gold into cash, you're kind of destroying that metric. So everything we do is focused on trying to deliver value of gold to our shareholders by growing our ounces in the ground faster than shares outstanding, with the thought being that the more gold that we can provide on a per share basis, the better our share price should do in a rising gold price environment.
Mm-hmm. Yeah. Okay, thank you. And what is the value proposition of your company? You mentioned also a pre-feasibility study. Can you expand on that?
Yeah, so we just finished an updated preliminary feasibility study at KSM showing a mine life of 33 years, open pit only. It's a long mine life. The proven and probable gold reserves on that mine plan There's 47 million ounces of gold and over 7 billion pounds of copper and about 160 million ounces of silver. And if you look at the after-tax net present value at metal prices below what they're trading at today, the after-tax net present value is about $7.9 billion compared to our market cap today of about $1.2 billion. And then that doesn't even include all the other metal that's behind that. We also showed in the updated technical report that included the pre-feasibility study, what we call a preliminary economic assessment that shows another 39 years of mine life, capturing 23 million ounces of gold and 16 billion pounds of copper. That adds another $5.8 billion of after-tax net present value at the time when you would start that second mine plan. So, we can point to a project here now between those two mine plans that can go on for more than 70 years and produce a lot of metal each and every year for 70 years.
It's a whole lifetime on its own, and it's with current metal prices, and it's only part of the whole project or all the projects.
Yeah,
so it's not the whole.
No, we've limited. So as we went through the project is also unique in that we have our environmental approvals and permits in hand. We've actually started construction on site capture activities at KSM. But you look at this project, we have 11 billion tons of resources. We have only approval for 2.3 billion tons of tailings capacity. So what we capture in our preliminary feasibility study is the 2.3 billion tons that are approved. That still leaves another 8.5 billion tons of material still in the ground that can be captured with additional operations.
And not to mention the positive surprises in the future. Oh man, that's a lot. And so this roughly 8 billion versus 1 billion, and that's already nice. But for the beginners, I would like to ask, what is the value of a pre-feasibility study? So why don't we jump to the feasibility study? Why? Do you know what I mean? So
yeah, that's a great question. Although I will point out that a lot of our study is already at feasibility levels in terms of variance in terms of projected costs. But we take the view, and rightly so, I think, is that this is a project that's beyond our capabilities to build. It's going to require the involvement of one of the largest mining companies on the planet. In fact, we think there's less than 10 companies that have the social, the technical, and the financial wherewithal to develop a project like this. And in our discussions that we've had with these companies over the years and continue today, they'll be the ones doing the bankable feasibility study so they can make the construction decision themselves. It's something that they would rather do versus having a company like Seabridge do that work.
Yeah, and you mentioned these 10 companies that are large enough to absorb this project, but how do you plan to mine this huge resource out of the ground?
So we're looking to get a joint venture done, bringing in a major mining company that's willing to commit to go all the way to construct the mine. We would like to maintain a meaningful interest in the project, say somewhere between 30 to 49 project, recognizing that whoever builds this mine wants the majority interest. But we also hope to minimize our capital exposure. One of the challenges on this project and why it's only so few companies that can build it, the upfront capital cost is about US $6.4 billion. That's a lot of capital to spend to get to first production. But once this mine starts producing, you've got 33 years of initial mine life from open pits that generates cash flow every single year for the 33 years. In fact, if you look at the net cash flow that'll come out of this project for the first 7 years of mine life, at today's metal prices, it exceeds $2 billion of cash flow per year once this mine is built. Yes.
Okay, I just quickly checked the numbers in my head. Okay, that's huge, and then it's probably if it's so large, then it makes sense to have partners. And what is the realistic time horizon for this? Yeah, so like if I buy a share, this share, I should not hold it for until the next week. You know what I mean? So this is at least a 10, 20, 30-year project, right?
Although there will be times along the way to take profits and value before that. I mean, we've now run the company for 23 years. If you look at our share price performance relative to the gold price, since I formed the company in 1999, the gold price is up 500%. Our share price is up over 5,000%. So one takeaway is just on the gold price itself, if it continues to go higher, which we think it will, our shares should do well. In the context of KSM, when you look at a best case scenario, we bring a partner in, let's say it takes them a couple of years to complete bankable feasibility and then another 5 years or so to build a mine. You're not seeing first production here until 7 or 8 years into the future. However, I believe you'll start to get a lot of value way before that, initially on just announcing a joint venture partner stepping in to take the project to the next level.
Yeah. Okay. So that was my question, and thank you for expanding on that and answering it longer, because that gave me more data, or us more data. So that at least 7-8 years. But yeah. Okay, I understand. So that's great. And so then after that we can expect cash flow. And you mentioned also that the share price went up much more than the gold price. That's understandable. But I asked this only we already talked about the value proposition, but I asked this only for the beginners. So if I hear something like that, then it's something like a red flag, because I think, because I don't know enough, I think that, okay, it is already too late. The train left. Why is that?
If you look at our relative value compared to other companies that have advanced projects in joint ventures, we trade at a huge discount to peer group companies. The train has not left the station yet. In fact, I think if you look at the recent report we just finalized and filed, the market is not yet taking into account the added value we have from that study on its own, let alone a joint venture partner. I am very convinced that once we announce a joint venture, that we will get an immediate re-rating in the marketplace. I've been talking about a joint venture for years. It hasn't happened yet. Although I've received proposals from a number of companies over the years, in my view, terms trump timing. And it's only when we get the right deal with the right partner that we will commit to a deal and move forward. So I think the market is kind of still scratching their head on whether a deal is going to happen here or not. I'm betting that it is. I've got 95% of my net worth tied up in Seabridge common shares. I'm taking the other side of that bet. And I think when that does happen, just throw some numbers around there. Okay. So let's say the project is built and it's generating $2 billion of cash flow a year. And let's say that we only have 30% of the project. That gives us our share of profits is about $600 million then at today's metal prices. We're trading today at about a value of about 1.2 billion. Yeah, you give a multiple of 15 times that cash flow, that gives you a $9 billion valuation compared to Yeah. Matter of fact, a lot of analysts that cover us, you look at the range and target prices. Yes, some have target prices only in the mid to upper 30s. We have one analyst that has a target price for our shares above $100 US on the basis that we get a deal done and the gold price continues to do well.
Yeah. So it's none of what we discuss is personal financial advice, but I think we may say that people should look at not the share price and what the share price did, but the value, the underlying value, what you can buy today and how much does it worth. And many people don't understand that share price can be like 10% higher than last year, but still the share can be, in that case, the share could be more cheap than last year, because I don't know, the underlying value is 2 times more. You made a new discovery or whatever. So yeah, I think that's what people should look, and that's why we talked about the pre-feasibility study also. And on this evening, on the first evening on the Rule conference, the Rule Symposium, we had a fascinating conversation with a few people, and they recommended me to ask you, why do you think the share price will go up? So maybe it's boring to talk about the share price, but why do you think the share price will go up? Did we cover already this question, or would you like to
No,
add something more?
I think there are three major reasons why we expect higher share prices going forward. Number one would be the gold price, obviously. We have over 2 ounces of gold in the ground per common share. Nobody comes close to that in the industry in terms of exposure to gold on a per share basis. And as our track record shows, if the gold price goes higher, so does our share price. So if you're just looking for a way to play the gold market, we provide optionality and leverage that you can't get elsewhere. Second would be the KSM joint venture. I know that when a partner steps in and when this mine is built, it's going to be it'll be one of the largest mines in the world and one of the most profitable, and actually one of the lowest cost. We're looking at a project that will produce gold at an all-in cost of production, which includes the upfront capital of $6.4 billion, the sustaining capital over the 33-year mine life, the closure costs, the reclamation costs, and the operating costs, net of copper and silver credits, of about $600 an ounce. The industry today is reporting all-in sustaining costs of well above $1,000 an ounce. So this will be at the lower end of the cost curve as well. And then the last reason to buy our stock is our track record in terms of finding gold. My exploration team has found more gold over the past 15 years than any company on the planet through exploration. In fact, we've added over 100 million ounces of gold through exploration activities. We now have 3 earlier stage projects we've purchased since 2015 that we're just starting to get started on. And I think any one of those projects, if we're right in terms of what we see there as potential, could lead to higher valuations in the marketplace as well.
What is your secret? How could you achieve this very low dilution, so to say, so that roughly 2 ounces of gold per share? How could you achieve that?
I think we've been very careful with our capital structure. We only deals on acquisition or only commit dollars to exploration if we can convince ourselves that that work will result in growing ounces on a per share basis. It's easy to go out and buy projects, but if you're diluting the valuation in terms of ounces per share by issuing more shares, you're not creating value. So I think the discipline we've had for 23 years now, what I'm most proud about as the CEO of this company during that entire time, is that after 23 years, we only have 80 million shares outstanding, but in all resource categories, we have 170 million ounces of gold. And I think that discipline has really played well with our shareholders as well, that appreciate that we're not going to blow up the capital structure. It always amazes me looking at our industry how quickly share counts get out of control. Hundreds of millions of shares outstanding by small companies that really haven't offset that dilution with value. We measure our success by ounces of gold per common share, and we're not going to change that anytime soon.
Okay, nice. And a few questions came into my mind. What is the percentage copper income expected related to gold and silver? So just
that's a good question. It depends on which deposits you mine first.
Okay.
For example, our pre-feasibility mine plan that focuses on 3 open pits, what we have forecasted there at today's metal prices, 75% of the revenues come from gold, 25% from copper, and then a little bit from silver. So it might knock each of those down by a point or two. If you look, however, at the PEA mine plan that focuses on the copper-rich zones at Iron Cap and Kerr, the copper component becomes 70%, the gold component becomes only 30%. So it's more focused on copper. That really makes this project unique. For a gold company or a copper company, they can determine which deposits they want to go after first and drive value either from the copper side or the gold side. There's not many projects that I've seen in my 40 years in the business that provide that optionality and flexibility.
Yeah, and I like copper, so I expect a huge copper deficit from 2025 or so, and going up. No one knows where the copper will come from. Enough copper will come from. And
I always make the point that, if you look at all the green energy initiatives that are being put forward and transmitting electricity to end users, we don't produce enough copper today, let alone what the future demand is going to be. And unfortunately, those same groups that are cheering for the green energy initiatives are those same groups that are anti-mining. To satisfy future demand for copper, we need a lot new copper mines to be built. And I've never seen as challenging a time as we see today in trying to get a new mine permitted. So it's going to be it. So I am bullish on gold, but I'm also very bullish on copper just because of the supply and demand fundamentals that I know is in front of us over the next 5 to 10 years.
And you mentioned this this risk of permitting the copper mines, which I fully agree with. But what else could go wrong? So your project is amazing, but what could go wrong?
Well, you know,
You should ask this question.
Well, first and foremost, we have talked about a joint venture for a number of years, but market environment was not appropriate to get the deal done that we wanted to get done up until now, I'd say. So you always have to look at what are the majors looking for, and is the M&A window open for these types of transactions? Right now, I believe it's open again. The gold industry, the elephant in the room is the gold industry is running out of reserves. They need new projects because they're going to exhaust their reserves in the next decade or so. The copper industry needs new projects because of the future demand that's going to come in from electric powered vehicles and other green energy initiatives. So the big companies need new projects at a time when also they're generating a lot of cash flow because metal prices are pretty good today compared to where they were, say, 5 years ago or 10 years ago. So I think the timing is good for us to get a deal done in terms of the ability for the big companies to transact and their need for new projects. The biggest risk remains metal prices. You know, I mean, clearly, if you look at the sensitivity to any new project that's on the drawing boards, metal prices play a big part of that. One area that we've de-risked, though, is a lot of these projects that are still out there still need to be permitted. And as I said, that's getting far more challenging today than any time in my 40 years in the business. We are fortunate that we've been successful on that. We've taken the project through the environmental approval process, and we've now started early stage construction to make sure that the permits we have are good for the life of the project.
Okay, and the political risk you are not really worried about?
Well, you know, one of our guiding principles from day one was to try and avoid political risk. I built mines in my career that were expropriated by third world governments. Political risk is very real in our space, especially when you look at some of the jurisdictions that companies go into. I mean, example right now, Barrick is choosing to spend dollars on a project in Pakistan. Great project, but it's in Pakistan. And who knows what the government's going to be 2 years, 4 years, or 5 years out on a project that's supposed to go on multi-decades. So we focused all of our activities in North America. All of our projects are either located in Canada or the United States, where, yeah, there is a level of political risk on the permitting side, but it's smaller than what you might see elsewhere in the world.
Okay. And you mentioned the mining costs. If I can correctly remember, was it $600 until $1,000 per ounce, depending on the project? Did you mention that? Do I remember
the PFS, the 33-year open pit mine plan that focuses on gold, we have an all-in cost of production there of about $600 an ounce, including everything, all the capital, all the closure, all the reclamation, and all the operating costs. If you look at it then in terms of the other mine plan that focuses on copper, and you look at that as a copper mine, the all-in cost of production there is about $1.44 per pound of copper produced. All-in cost. So this is going to be a very low-cost operation, whether it's developed as a copper project first or a gold project first.
Last year I looked at at least 40, 50 gold mines and similar mines, and I compared the mining costs. And then you see the outliers, and what you mentioned is in the lower end, so it's very low. Why is it so low? Is it high concentration or easy metallurgy, or why is it so low?
There's a lot of factors. Probably the most important factor is we can use hydropower for all of our needs.
Okay.
The government of Canada and British Columbia has built the power grid right past our project, and we've now secured with contractual agreements with BC Hydro, the state-run power organization there, 245 megawatts of power from that line that right now the current tariff is about 5 cents per kilowatt hour. And they're now building a substation for us that we'll tie into. So if you compare the cost of 5 cents per kilowatt of power versus a diesel plant, or that's probably 20 to 30 cents per kilowatt hour. So that helps. Metallurgy also helps. We have very simple ore, no nasties in the concentrate that we produce, good recoveries on the gold and the copper. And then on top of that, you'd also have, for the PFS mine plan, big open pits with very low strip ratios. A strip ratio determines how much waste you need to mine to get to every ton of ore. And at KSM, our strip ratio is 1-to-1. For every ton of ore that we deliver to the mill, we only have to mine 1 ton of waste. And at $2 plus per ton of mining, the lower the strip ratio, the lower the costs.
Okay, that's great. And I have a few more questions if we have a little bit more time. I think many of us in Europe would love to have a dividend. Do you have a plan for dividend?
Yeah, we're a bit unique in that as well.
Yeah.
I mentioned that our industry is hell bent on turning gold into cash, and then if they have enough cash, they dividend that out. My goal has always been to find a way to take back our share of the profits in any mine we're involved with in the form of physical gold, and then dividend out that physical gold to our shareholders.
Okay.
Any joint venture discussion we've had over the years and continue to have today involves that our ability is that we can take our share of profits in the form of physical gold. Obviously, we'll need to cover certain G&A costs, corporate costs with those profits. But I think when you look at the magnitude of numbers we're forecasting, there'll be a lot of gold to dividend out to our shareholders on a basis that allows them to take back physical gold in terms of a fiat currency known as cash.
Yeah, that's the point. So because if you pay fiat, then it's the point is lost. Yeah, and how can I expect gold? It doesn't have to be fully thought through yet because it's still in the future. But what is, for example, a way to receive it in physical?
Recognize that we've got, I don't know how many shareholders. We probably have 20,000 shareholders between institutions and retail, although very tightly controlled on the top end. So you're not going to want to devise your gold to 20,000 shareholders. But what you can do is we can actually deposit our physical gold in some sort of gold ETF, like a Sprott's physical PHYS, and then we can take back shares in exchange for that gold we're depositing, and then we can dividend out those shares to our shareholders. And that ETF is quite amenable to, if you want to take back the physical gold by turning your shares back in, you can take back the physical gold, or you can keep the shares and know you have the gold behind the shares. Or if you just want cash for some reason, you can sell those shares and take back cash. So it gives a lot of flexibility, but it's all geared to physical gold back to our shareholders, and you choose what you want to do with it.
Yeah, that's great. And how will you increase the shareholder value in the next 1 year?
Getting a deal done on KSM. I think we're now at a point with this new mine plan and the market dynamics we're seeing right now and the need for big companies to have new projects. I think the biggest unlocking of value, independent of the gold price, is getting a joint venture done. And my goal is to have a joint venture in place with the major mining company within the next 12 months.
So it could be, okay. So within 1 year, it is possible to announce the partnership. That's great. And
that's what I'm working towards.
Yeah, even if it will be not 1 year, but it's great to know that it's close. And what did I forget to ask? What would you like? What else would you like to explain to us?
Well, we threw a lot out, obviously, at this interview, and I appreciate, Peter, you taking the time to do this. What I will say is we have a very user-friendly website. If you go to our website, www.seabridgegold.com, there's a lot of information there on our website. We update our corporate presentation every month that recalculates our ounces of gold per common share, recalculates all the valuations we do on comparative measures to other gold companies. And then if you have further follow-up questions on top of that, Peter, I am always welcome to shareholders to reach out to me, send me an email. My email address is Rudi, R-U-D-I, @seabridgegold.com, and be happy to get back with answers on email. So, I am obviously very proud of what we've accomplished over the past 20 some odd years. I am proud of the team we have in place, but I still think the best is yet to come.
Yeah, that's a great way to end this conversation, I think. And it's good that you mentioned it. I will also put the links in the description, into the description. Okay, thank you very much. I'm thrilled that you are here. Thank you for your time. It was a very good conversation. I enjoyed every minute. I think we learned a lot. Thank you.
Peter, totally my pleasure. And next time when you want to do an update, just reach out. Happy to get on the line
I
with you
will
again.
do that. Perhaps in 1 year. That would be a great update. Okay. Thank you very much.
Thanks,
I wish
Peter.
you a nice day. Goodbye.
Take care.